Well, cheers to Trend Retail Trading Team. This is your routine debrief. And routine trader is drinking wine today because we had a good day, and I think the sun is technically still above the horizon, so we don't have to switch to tea quite yet. Quite yet. And as you know, that'll probably extend a little bit beyond the sun falling behind the horizon there. So, anyways, let's begin the warm up, or let's begin the debrief today by checking out the warm up, looking at what worked, what didn't, and looking forward to what we can expect tomorrow. So, cheers to you if I didn't do that already. So, textbook false breakout. And we'll look at what this means specifically in the charts in a little bit here. Um, but if you look at kind of what we were expecting in the warm up today, it was kind of that tight range and choppy type tape. Yet everything changed in my opinion when we got through that 4130 level, that 4120 level on SPX. We had that normal variation profile. We had that implied tighter range. Yet whenever you come to major trend lines, major patterns, whatever, a lot of people are looking at the same thing. And when you start to break below that, especially if it's been a multi-day consolidation, that's when you see that extension. So um, once we unwound that 100% net long overnight inventory, really around that 4130 area, that prior day close, you saw that continuation move, and we really cleaned up a lot of areas that we were talking about yesterday. And yeah, so what we're going to look at it in a little bit. Like I said, it's multiple trend lines. It was a really nice confluence of different zones. I didn't necessarily actually see all of them yesterday. So when we finally got through it, that's when you saw the continuation. And you got paid if you were looking at that 4090 area and even lower today that we were talking about yesterday. So, trading it intraday, I did think I was positioned short. I got short at 4164, and we'll look at that in the chessboard chart specifically why. Yet I did not expect this level of continuation. Um, you probably should have been looking for some type of extended move based on the open. You had that open test drive, which is it's a super bearish open, and we also had another key thing which I didn't notice until I was looking back on this, but we had that VIX contraction. And as that 50% contraction, I was a little distracted by the fact that VIX opened down. Yet, if you look at VIX, and obviously we'll go to that chart eventually, once the RTH opened, we kind of got that mini consolidation. We really went sideways, then we started to trend up, and when the VIX trended all day, so that was implied to an extent. It was kind of a little obscure, but I think that was notable to point out as well. And again, just you look at the channel support 4120 again, confluence in multiple areas, and that is evident there. So I think the most important thing to take from all of this is that we created a supply zone now from the high on that 50-minute chart about 4170 to the low 4150, and that's going to be kind of an important supply zone to look at going forward. Obviously, CPI can rip through those things like they don't even exist yet. For tomorrow, Monday, that's going to be kind of an important area to look for. Obviously, a breach, but mainly I think to perhaps uh, redeploy shorts if we do get a rally up to there. We'll see. So moving on to the charts, we're first going to look at the weekly, just kind of get our bearings here, and just look at what's happened big picture. In big picture, to me, not really too much here on the weekly. I don't think there's too much to talk about. It's still an inside week. We're not even at the trend line. We just kind of pulled back a little. I think it's a very reasonable pullback given the run that we've had since breaking that trend line. And so to me, I'm still kind of looking to buy the dip here based on what we've been talking about in the debriefs, and we'll look at specifically some areas, but I do think that this is actually an opportunity to buy. I do not see this, albeit an intraday pretty large move, pretty aggressive sell. I'm still looking big picture uh, at the bullish case, and I think that we still have to respect that. Again, CPI could change everything. I will be flat going to CPI. I have no idea what's going to happen there. Could be a big move either way. Yet for the next 2 days, I'm now looking, so I was looking short obviously when we are near the top of the range, but now that we've kind of settled in and filled out, I think what's an important area, I think that it's going to present some potentially strong long opportunities. So uh, you might see obviously consolidation. Yet I really don't expect to see too much more down, and we'll look at again in some other charts potential next steps if they do want to take us a leg lower. So still above that trend line, still have to maintain the bull bias in my opinion. Obviously, doesn't have to affect your intraday trading, but big picture, bulls are still in control. Once again, in my opinion. How many times am I gonna say that this video? Okay, so daily chart. You saw that little the circle or ellipse, whatever you want to call that shape that we were talking about yesterday. That was that important consolidation. You did see a potential break below. Yet I'm not so sure it's a strong break, and we'll look at that in the next chart. But what I want to really bring to your attention here is the fact that we just moved into that 40.85 to 40.40 area, that first major demand zone on the daily chart. And so far we have wicked it. So far, the very top of that range is acting as a potential support. So as we move lower into it, if we do get an extension of the down move, I'm going to be watching that box super closely, that 40.85 to 40.40 area, to see uh, if we can get some decent rotations upward. And conversely, if they start to move toward or move through that quickly, that's going to be telling us something as well. So that's what I'm looking at on the daily. Really, the daily chart that I'm most focused on is this macro chart that we always bring up. And I think the first thing that we want to address is the fact that that flag shape, I'm sure you've seen it. I'm not sure, but you may have seen it on Twitter. You may have seen it from your various bullish newsletters that we were in a flag consolidation today. The initial consolidation was a little tighter, and it did look like we potentially broke it. But if you just kind of move the trend lines around, to me, we're still kind of flagging. So it's supporting that first arrow where you see the LVN on from about at about that 4100 area. You're seeing that's kind of the first support on this chart. And as far as I'm concerned, we haven't broken the bull case at all. So we're just kind of filling out volume here, as I've been saying. You kind of had to. You had literally no volume from 4090 to 4100 on the chart. So this is just kind of a healthy pullback, filling that volume in. And yeah, I mean, it wasn't a high volume sell off either. So just kind of, to me, tomorrow, I do like the dip buying opportunities. Just at first glance, we'll obviously address any changes during the night. Yet I think that the charts are supporting a potential support in this LVN so far. So obviously, if we get through it, we're looking toward that 3990 POC long term here. Thing is CPI, so I think that really complicates things. Perhaps if you do get CPI move down there, that could be a decent buy as well. We'll talk about that if and when that does happen. That'd be a pretty surprising move for me if we see that on Tuesday. So really, what I'm looking at is this initial support at 4100, just for the next couple days. 4050 really I think could be the next potential target. And just to kind of show um, that support, we're going to pop into our chessboard chart, and you can see why. So we got near that prior month value area high. We got near, which is also near the prior week value area low. Yeah, we didn't quite tap it. So as we kind of move lower, and perhaps again, this is the bear case. I think that we may see more dip buying than continue selling. But to give the bear case, that 4077, wherever that number is, 4077 about to 4070, so 4070 we'll say, just round it up. That zone's kind of the first major support. And as we move down to that 4050 area, we go back to that macro chart. You can just see all my pretty little lines. That's called a clusters, is what that's called. That's from Order Flow Labs. You can just see this 4050 area really all the way down is just full of clusters, and what those are, very succinctly, those are potentially strong supports. So it's just one giant block of them from about 4,000 or 3990 if you want to go to the POC up to that 4050 number. So to go back to the chessboard and just kind of review a concept I think is really important. Yesterday I mentioned that there's 4 basic profile shapes. Let me show you what site this is. I didn't mention this yesterday. So if you go to 4 common volume profile shapes on NinjaTrader, so this is the website. If you just go NinjaTrader, understanding the 4 common volume profile shapes, you'll get this document. And I find this to be very accurate. This is one of my favorite references for every day. It's really simple. What we saw yesterday, and this really, I think, was the major takeaway from that debrief, was the fact that you saw these B profiles developing. So you saw this big one here, you saw this big one here, which really implied, this is by the overnight session, by the way, so not too much volume in here, but these two are super important. You saw that those signs that the longs were exiting the market. And you saw the continuation today. We popped. I haven't changed any of these circles. I changed the color in this one, and I added. Oh no, I did. I did change. That's a lie. I did add this one yesterday. So or this morning. So you saw this shape. You saw the longs exiting the market here, and today you saw that continuation. And what was that caused by? I didn't even make notes in my little document here, but this was really what caused my entry this morning. It was you saw the false break above that trend line sweeping this high, so prior day high, and you saw us fall back in. You saw that poor high pop up, and all that means is weak hands at the highs there, weak buyers at the highs. You saw us pop back in, so that's a really good sign of a fake break to me. I think that's why I circled it. And so the initial reaction, as long as we were below that overnight high, I think it's very reasonable to be taking a short. You'll see this intraday all the time, where you'll have one of those classic technical analysis patterns, and we will fake out first, then pop back in. So when you see it on the higher time frame, that's when they're really there's a lot more movement to it. So I think that's why you saw that false break in once we lost that 4130 area and pop back below. I think that's why you saw such an extreme continuation. It's all about momentum, and those fake breaks can be pretty darn powerful. So that's what we're looking at in the chessboard chart there. So just to show you what happened from the important chart yesterday, that volume by price chart, is this area here, this 4080 to 4100 area yesterday was completely empty. There's no volume there. So now you saw us come in. This arrow was there yesterday. We're starting to fill it out a little bit. We have a nice wick right near the bottom of it, and so that kind of, again, goes back to our thesis of potentially looking for those dip buying opportunities, those long rotations for day trading tomorrow. And let's see, is there anything else? Oh, RSI. RSI is beautiful. So yesterday we were talking about how we had gotten oversold in the RSI, and perhaps we're looking for that recharge overnight. Well, man, we got a heck of a recharge. It went all the way into what I would consider severely overbought territory, really setting up, I think, some fuel for that down move. And now you can see we're oversold once again. For me, I do have a bullish assumption here going forward to Tuesday, and again, that's kind of supporting that. So yeah, so final chart, volatility, the all important /VX. Yesterday we were talking about this channel, excuse me, and how I felt that it would inform tomorrow. And we actually saw that initially. We saw that break. So this was overnight into the morning session. This is why I mentioned at the beginning I wasn't too focused on volatility chart at the beginning of the day, because we saw this push through. Yeah, as we started to regain the pivot, you saw this nice base here, and we started to kind of initiate from about I think it was like 11:30. Let me check it on my execution chart here. See when we actually got through that 4130 area. Oh, very nice. Yeah, right about when we lost 4130 area, you saw that reflected volatility. You saw us pop into the channel, and you saw that continuation. So, a nice little fake out. I'm not gonna lie, I wasn't too keen on the bear case until I saw that false break when I first looked at volatility this morning. Yet it eventually did play out. You eventually did get that trend, and now we're kind of back above that pivot high, and trending up on volatility. So if we want to go back to the bear case, until volatility, in my opinion, is back below at least 2150, you have to assume that I shouldn't say assume, but there's a higher probability that we may continue the down move. Yet we have a nice potential double top setting up here. So I'll be looking for that move below 2150, and really I do want to be below that tomorrow for the longs, and if that's confirmed, I think that just adds more to that bias. In case you can't tell, I do have a bias for tomorrow, and it's long, despite the normal bearish bias. Yeah, so I don't want to say I'm looking for things to confirm. Yet I think that if volatility is confirming, I'm going to respect that and look for the move lower. The VIX itself closed at 2071 today, so we are back above that all important 20 level. Yet we're just above it, so I could see a lot more basing activity, between let's say 19 and 21 as we go into CPI on Tuesday, which further suggests that either chop activity or maybe at least minor retrace um, on the bull side of things. So we'll see. I think it's a really great spot to be for CPI on Tuesday. This is the all important VIX 20 level. The all important trend line is not too far below, and we're really setting up, I think, for the next major trend move in the market. Be it up, be it down, we will be ready for it. I still have to think that the bear market did end on October 13th, as long as we're above that trend line. Yet I'm super willing to change that assumption if we are to pop back below it. So I think that gives you some pretty good levels for tomorrow. Perhaps Monday as we go into the weekend. I'll probably have a debrief between now and Monday night. Uh, we'll go with a 70% possibility, just in case. I'm not sure exactly what I'm doing this weekend, so we'll go from there. But yeah, that is all I have for you in terms of the charts. So as always, please feel free to tweet at Routine Trader with your thoughts. I'm also happy to answer any questions that you may have. Just go ahead and put it in the comment section of this video. And yeah, finally, if you enjoyed today's content, please give it a like to help with YouTube's algorithm. I have that written down for the end of every video for now. So yeah, I do appreciate that though. It does help. And yeah, so with that, until tomorrow, enjoy your evenings and stay close.